Welcome back to the Stocks Update. If you're new here, make sure you hit that like button and subscribe so you never miss an update on Lucid Motors, EV stocks, or market-moving news. Today's deep dive is packed with insight, analysis, and some unusual trading activity that's raising a lot of eyebrows. We're going to take a thorough look at what's going on with Lucid Motors LCID stock, why it dropped nearly 2%, and what's happening beneath the surface that has short sellers excited, but also some big institutional money quietly accumulating shares. We're also going to break down key economic data that may have sparked this market pullback, cover some political finger-pointing that's been making headlines, and analyze trading volume, option activity, and potential future catalysts for Lucid. On the trading day in question, Lucid Motors saw a slight decline in its share price, closing down 1.95% at $2.38 per share. The stock traded between a low of $2.38 and a high of $2.52, showing some resilience throughout the session. Despite the drop, there were signs of intraday recovery, which suggest buyers were stepping in at lower levels. This modest dip may not seem dramatic at first glance, but the context surrounding the decline tells a much bigger story. The broader market was heavily influenced by a series of disappointing economic data releases that triggered recession concerns. Even though Lucid didn't report any major news of its own, macroeconomic fears sent shockwaves through most sectors, including EVs. Three major economic indicators released on the same day sent a strong jolt through the markets. ADP employment report. This private sector jobs report missed expectations, raising concerns about the strength of the labor market. GDP gross domestic product. Surprisingly, GDP growth was reported as negative, something that instantly triggered recession chatter across financial media and Wall Street circles. PCE personal consumption expenditures. This inflation gauge also showed disappointing numbers, either suggesting inflation remains sticky or that demand is weakening. Each of these data points has its own implications, but combined, they created a perfect storm of uncertainty. As investors digested the numbers, sentiment quickly turned sour, and Lucid, like many growth stocks, became collateral damage in the sell-off. Adding some political drama to the already tense market environment, former President Donald Trump took to the media to criticize President Joe Biden, blaming him for the poor economic data. However, it's worth noting that the GDP data in question was from the first quarter, and Biden was only in office for about 20 days of that quarter. In reality, there's always some overlap between administrations when it comes to economic data. The effects of policies often take months to materialize, and in this case, it's not entirely accurate to attribute Q1's performance to Biden alone. Nonetheless, the media spectacle surrounding Trump's comments added more confusion to an already fragile market mood. Interestingly, there was no breaking news from Lucid Motors itself. No press releases, no SEC filings, and no fresh analyst upgrades or downgrades. This silence is likely because investors are now fully focused on the company's upcoming earnings report, which could serve as a major catalyst for the next leg in Lucid's share price, either up or down. Many traders are anticipating how Lucid will perform in its financials and what kind of forward guidance the company might offer regarding production, deliveries, and revenue. While official news was absent, Lucid fans noticed a subtle yet telling update on the company's US website. Under the Under the Hood section, a key feature that had previously disappeared made a return with a new label, Fall Availability. This small detail might suggest continued supply chain challenges or internal production delays, possibly pushing availability timelines into the fall season. Although it's a speculative observation, it offers a potential hint about the company's operational cadence. Whether this points to delayed ramp-up plans or a strategic marketing move remains to be seen, but it's definitely a development worth watching. Now let's talk about short interest, which spiked significantly during this recent pullback. According to available data, short sellers added a staggering 8.84 million shares to their bearish positions. That brings the total short interest to nearly 30% of Lucid's free float, or around 363 million shares. This is a substantial figure and shows that many investors are betting heavily against Lucid. When short interest is this high, it can either mean big money expects the stock to fall further, or that they're leaving themselves vulnerable to a short squeeze if positive news hits. Remember, when short sellers increase their positions, they're effectively increasing selling pressure on the stock. This type of activity can accelerate a downtrend and often triggers panic among retail investors. Despite all the shorting activity, there's something unusual happening in the background: large transactions that hint at institutional buying. We observed several large volume trades, many of which seemed algorithmic or consistent in size. For example, $2.26 trades occurred multiple times, possibly indicating automated buy programs or hedge funds accumulating in chunks. Other significant block trades included $1.63 million, $1.25 million, and a particularly notable $21.5 million transaction. These aren't your average retail purchases. While we don't have visibility into the exact identity of the buyers, the frequency and size of these trades suggest that major players may be building a position or defending one. Let's break down the options data for the day. Lucid saw 2.34 million in call options traded and around 970K in put options. This led to an options sentiment split that leaned slightly bullish, although it's important to note that 62% of the trades were classified as neutral. Why neutral? Because the bulk of these options were executed around the midpoint of the bid-ask spread, making it difficult to determine whether they were initiated as buys or sells. Nevertheless, the increase in total premiums from $1.1 million the previous day to over $3.30 million signals growing interest and speculation around Lucid's near-term movement. Many investors are now eyeing next week, when Lucid is expected to release earnings. This report could play a crucial role in shaping the stock's direction in the short term. Based on current sentiment, bulls are targeting a move back above $2.50 and potentially toward $3. Bears are hoping for a breakdown below $2.50, possibly retesting recent lows. Interestingly, despite the bearish macro signals, we didn't see short sellers go all in with aggressive bearish options plays. That hesitation might be a sign that even pessimists believe Lucid is nearing a bottom, at least for now. Digging deeper, we also found some large trades happening in dark pools private exchanges where big institutions often operate to avoid influencing public market prices. Here are some of the notable trades. $1.7 million, $1.03 million, $2.8 million, $4.4 million, $1.6 million. These trades add to the growing evidence that institutional investors may be quietly accumulating Lucid shares during periods of weakness, a strategy often referred to as buying the dip. Lucid wasn't the only EV player to experience this dynamic. Rivian also saw some abnormal volume and trading behavior, despite having no clear news catalyst. One potential explanation: speculation around auto tariffs or broader industry developments that may benefit American EV manufacturers. When stocks like Rivian and Lucid move in tandem, it usually signals that sector-wide themes are at play rather than company-specific news. On the technical side, Lucid is still holding above its 50-day moving average. The stock is currently trading in a tight range between that and the 100-day moving average, with $2.63 identified as a critical resistance level that hasn't been tested in the current cycle. Support appears to be holding around $2.33, and resistance is visible at around $2.55. These are the levels to monitor closely as we head into the next few trading sessions. Tomorrow's manufacturing data could be the next big macro event to impact Lucid and the market at large. Since this report reflects April's data, it falls entirely under the current administration's timeline, meaning there's no room for political blame shifting. To wrap it all up, Lucid Motors is currently navigating a challenging but potentially opportunistic period. Economic data is shaky, short interest is high, But institutional buying and rising options activity suggest that smart money might be seeing value at these levels. With earnings right around the corner and key macro events looming, this could be a pivotal moment for the stock. Let me know what you think in the comments below. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.